In this video we are going to talk about best REITs to buy. So before starting this video, please like this video and subscribe to this channel for our future updates. Listed on the New York Stock Exchange, real estate investment trusts, REITs, allow individual investors to purchase shares in real estate portfolios that generate income from a variety of assets. The real estate industry, which comprises enterprises that own, develop, and manage residential, commercial, and industrial properties, is made more accessible to investors through the use of these vehicles. Among other things, REITs are obligated to distribute at least 90% of their taxable income in the form of dividends to shareholders. Funds from operations, FFO, a measure of earnings specific to the real estate business, is a critical REIT metric. American Tower Corporation, AMT, Crown Castle International Corporation, CCI, and Prologis Inc. are just a few of the well-known names in the industry, PLD. Employees around the world have acclimated to working from home as a result of the COVID-19 pandemic, and different lockdown measures have been implemented to protect the public health. Despite the recovery of the economy, the recovery of the industry has been uneven. Workers who are returning to cities to live and work, for example, are suddenly confronted with skyrocketing costs for privately owned flats and commercial units prices that are significantly higher than they were when they first left the country. Annaly Capital Management Inc. Annaly Capital Management Inc. is a real estate and related asset management company that invests in agency mortgage-backed securities, MBS, residential and commercial real estate, and middle-market lending. According to the company's quarterly dividend announcement on November 10, the company's Series F preferred stock and its Series G preferred stock as well as its Series I preferred stock will be paid out. All of these dividends are payable on December 31 to preferred shareholders who have their shares in the company on December 1, 2021. AGNC Investment Corp. Investments in residential mortgage-backed securities, MBS, are made by AGNC Investment Corp., which uses leveraged borrowings and collateralized debt obligations to make its investments. It generates risk-adjusted returns through the use of an active portfolio management method. AGNC Investment reported a 70.6% year-over-year (YoY) reduction in net income attributable and a decline in net interest income for the third quarter of fiscal year 2021 that ended on September 30. According to the corporation, uncertainty over the prospects for the economy and interest rates had an impact on its performance in the quarter. SL Green Realty Corp. SL Green Realty Corp. is a real estate investment trust that focuses on office properties in the New York metropolitan area. Regency Centers Corp. Regency Centers is a real estate investment trust, REIT, that owns and runs community retail centers that are anchored by supermarkets. The company's properties can be found all throughout the United States. Regency Centers released its third quarter fiscal year 2021 results on November 4, which concluded on September 30. Due to the increase in revenue, net income attributable to common shareholders increased by more than nine-fold year-on-year throughout that period. Sun Communities Inc. Sun Complexes is a privately held corporation that owns and maintains manufactured housing communities, RV resorts, and marinas. The corporation has real estate throughout the Midwest and Southeast regions of the United States, as well as in Canada and other countries. Announcing the acquisition of Park Holidays UK for around £950 million, $1.3 billion, the business made the announcement on November 15. Park Holidays is a privately held company that owns and runs 40 vacation villages in the United Kingdom. Sun Communities' operations in the region will be significantly expanded as a result of the acquisition. Duke Realty Corp. Duke Realty is a real estate company that owns, develops, and maintains logistics and industrial assets throughout the United States. Leasing, property management, construction, and other associated services are also provided by the organization. Life Storage Inc. It has been in business since 1985, and Life Storage Inc. owns and operates self-storage facilities in 34 states around the US. The company has also expanded its third-party management platform, which controlled 357 facilities as of the end of the third quarter of fiscal year 2021, according to the company. Despite record seasonal occupancy and strong pricing power, Life Storage Inc. reported significant profitability and sales growth for the quarter ending September 30, 2021, according to company officials. Extra Space Storage Inc. Storage management company Extra Space Storage Inc. owns and maintains self-storage facilities around the United States. As of September 30, 2021, the business owned 2,054 properties with 1.5 million units and around 159 million square feet of rentable space, according to the company's website. Following its environmental, social, and governance actions in the self-storage industry, the company was recognized as a sustainability leader in the self-storage industry in mid-November. Mid-American Apartment Communities Inc. Founded in 1993, Mid-American Apartment Complexes Inc. (MA) is a real estate investment trust focused on the acquisition and management of high-quality apartment communities in the Mid-Atlantic, Southeast, and Southwest areas. According to the company's quarterly report for the third quarter of 2021, its excellent growth during the quarter is expected to continue into 2022 as a result of high demand for apartment housing and solid price trends across all of its markets. American Tower. It is a multi-tenant cell tower and related infrastructure owner and operator in the United States. The REIT owns 219,000 communication sites around the world, with significant concentrations of cell towers in India, 75,000, the United States, 43,000, Brazil, 23,000, Germany, 14,700, Spain, 11,400, and Mexico, 10,100. Because cell towers can sustain several tenants on the same structure, they can be quite profitable. The REIT projects a 3% return on investment (ROI) for single-tenant buildings, a 13% ROI for two-tenant towers, and a 24% ROI for three-tenant towers. As a result of growing market penetration for wireless devices, higher data usage per device, and increased mobile data traffic, demand for cell tower space is continually increasing. All of these developments, according to AMT, will fuel double-digit market growth through 2026. Since 2012, American Tower has successfully harnessed the wireless wave, achieving 15% annual revenue growth, 14% annual gains in funds from operations, FFO, a key gauge of REIT profitability, and better than 20% annual dividend growth. In addition to consistently rising dividends, American Tower has an ultra-safe payout ratio of 51%. But it's the way AMT is positioning itself for growth that makes it one of the finest REITs to purchase in 2022. By recently offering $10.1 billion for CoreSite, which has 25 data centers and has experienced double-digit annual revenue growth for the past 5 years, the REIT took a huge step toward repositioning for 5G. CoreSite's development pipeline will be accelerated by American Tower, which hopes to position its two firms with complementary product portfolios and 5G market leadership. After the CoreSite acquisition, AMT's growth story remains alive, says Argus research analyst Angus Kelleher-Ferguson, who upgraded his adjusted FFO, AFO, expectations for the business in 2021 and 2022. As CoreSite has a great growth profile, American Tower will continue to be one of the strongest growth stories of all REITs under Argus coverage following the transaction. Americold. Americold, cold, $32.07, is one of the greatest REITs to buy if you appreciate specialty real estate with substantial moats. Americold is the largest real estate investment trust in the world that focuses solely on temperature-controlled warehouses. The company owns 246 cold storage facilities with a total storage capacity of 1.4 billion square feet, which it leases to about 4,000 tenants. Americold says that it controls 22% of the cold storage business in the United States. Kraft Heinz, KHC, Smithfield, ConAgra, KEG, and Walmart, WMT, are among Americold's top 25 customers, with average customer relationships of 35 years. These top clients all use several facilities and purchase 92% of value-added services. Inflation and labor interruptions have weighed on 2021 FFO, prompting Americold to cut its full-year adjusted FFO target to $1.15 to $1.20 per share, down from $1.34 to $1.40 previously. Fred Bailower, the company's CEO, was fired in early November. A 15% drop in 2021, on the other hand, could be putting investors up for a solid dip buy in 2022. According to Baird analysts, the REIT will be able to completely absorb this year's labor cost hikes in 2022 by raising rents and renegotiating lease terms with long-term clients. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.